Hello, my name is Mildred Chidosho, a lawyer at MMS Advocates LLP. In this video, I'll be taking you through the consequences for breach of obligation in minimum tax and digital service tax. Tax is a debt that is owed to the state by each and every citizen, hence the obligation for every citizen to pay their taxes when they accrue. The Tax Procedure Act of 2015 specifically states that every individual has an obligation to remit and pay their taxes as of when they accrue and when they are due to be paid. However, there is an extension of time that every individual may apply to the Commissioner of Tax to actually extend the period of when you're supposed to remit your tax. The minimum tax is a new tax that came effective on the 1st January 2021, and as such, from this tax you are expected to pay 1% of your gross turnover, depending on which one is higher between the minimum tax and the installment tax. However, this being an obligation to every taxpayer that they ought to remit the 1% of their gross turnover, failure to which the Tax Procedures Act of 2015 further states that any taxpayer who fails to remit their tax when they become due and when they're supposed to be paid, then that particular taxpayer shall be liable to a penalty of 5% of the tax payable. So what this means is that when you're supposed to pay your tax, rather when your tax accrue and you fail to do that, that means you're supposed to pay your tax as just the tax liability. Secondly, you're supposed to pay your penalty, and depending on when you pay your penalty, of course it accrues interest. So this brings us to the order of payment. The Tax Procedures Act further states that there's an order of which taxpayer is supposed to remit their taxes. This mostly applies where you already have your tax liability. Further to it, you have accrued a penalty due to late payment, and further to it, you also have an interest that has accrued to the penalty. So in this instance, that means you're going to pay first your tax liability. So if you have remitted to KRA a certain amount, what KRA will do to that particular amount that you've remitted, they would first deduct the tax liability, which was there initially. Secondly, they will now deduct the penalty, and then thirdly, they will deduct now the interest that has accrued to that particular time when you'll be remitting that amount. So for minimum tax, that is the main consequence that a taxpayer may undergo should a taxpayer fail to remit their minimum tax as per the regulation, that is. So the digital service tax is also the new form of tax that was introduced through the Finance Bill of 2020, whereas from the digital service tax, a taxpayer is expected to pay 1.5% of the gross transactional cost. So that means if you are a digital service provider, or rather you have a digital service marketplace, you're supposed to remit 1.5% as tax to the government. So failure for you to remit this 1.5% of the gross transaction value, that means KRA just released the regulation which are known as the Digital Service Tax Regulation. In this particular regulation, they state that for penalties for failure to remit your tax, that means the Tax Procedure Act will apply to with regards to the penalty. So if we say the Tax Procedures Act is going to apply with regards to the penalty, it takes us back to the 5% that we had initially stated when I was addressing the minimum tax. So the digital service tax and the minimum tax, they both have the 5% penalty on the tax payable. So we are aware that KRA is the body that is mandated to collect taxes on behalf of the government. So in its duty, or rather when it's enforcing this duty of tax payment, KRA can do a number of things so that they ensure that the taxpayers actually pay the taxes to the state as it's required. So the first thing KRA can do, they can actually attach your assets as a taxpayer. So once KRA are aware that taxpayer X actually has a property located at a certain area, as long as it's within the jurisdiction of Kenya, then KRA can actually attach that asset as security for the taxes that have not been paid by that particular taxpayer. The second thing that KRA can do, KRA can actually freeze your accounts for failing to pay, or rather for failing to remit your taxes as of when they become due. The last thing that KRA can do, KRA can actually attach movable properties of a taxpayer. This is done through a distress order, where KRA issues a distress order to a taxpayer whereby they can attach the movable properties of that particular taxpayer so that they are able to use those properties as security for the taxes that have not been paid by that particular taxpayer. The final thing is that there are a number of obligations that generally a taxpayer has, or rather is expected to do, apart from just paying taxes. There are documents that are to be maintained by the taxpayers depending on the type of tax that that taxpayer is paying. So just to notify you is that failure to maintain this document as a taxpayer is also an offense under the Tax Procedures Act 2015. With that said, I hope this video has actually enlightened you on some of the consequences that the taxpayer is likely to face should they fail to remit their taxes when they become due. Thank you very much.